There's a question that often pops up in ERISA cases, and the question is, what do I do if the insurance company just won't make a timely decision? And of course, that is a complicated question. It involves a good command and understanding of both the policy or the plan document requirements, but also the claim procedure regulation. The claim procedure regulation is issued by the Department of Labor, and it provides the rules, in essence, as to what plan documents should say and how the claim process should be marshaled, how your claim should be adjudicated by the insurer or the plan administrator. So, what do you do when those time limits that are clearly there are not followed? Well, it depends. And that's a difficult question to answer with a clear-cut answer. If it is a material matter, generally speaking, most courts are going to give you the right to proceed to file a lawsuit. There's no penalty against the claim administrator in failing to make a timely decision, but rather the Department of Labor's position is that the claim process is deemed exhausted. That means you can go ahead and proceed with a lawsuit. That's not much consolation, but it can also mean that with the claim process being deemed exhausted and there having been no decision, that the standard of review might change. Some courts have held that if there's no decision that's been timely made, then the court is entitled to evaluate the claim firsthand, and so no deference is given to a non-decision. Some courts are a little more difficult on that, and they've held, well, if there was a prior decision, they're still given deference as to that prior decision. But the reason why there's an appeal process is because there was a challenge to that prior decision, and there were some problems with it, and supposedly new evidence was proffered. So that's not really, in my view anyway, a fair position to take, to simply give deference to an old decision. That's why you have a claim process, is to refine the decision so that the court is reviewing the final decision, not any and all decisions that happen to be pulled out in litigation. Now, a counter argument by the plan may be that there was tolling, that they asked you for some document and you didn't provide it, and therefore the claim was tolled. And that means that the clock stopped. That's what that word tolled means there. And of course, they can contend that they sent a letter to you asking for this or that and you never replied. And so the clock was tolled until you replied to that letter. But what if you never received the letter? Those are the sorts of games that get played. And that's where you need an experienced ERISA litigator to assist you during the claim process to counter those sorts of games that get played.